Tools of financing risk management. So, what are the different ways or different mechanisms that can help an Islamic bank to manage the financing risk? Number one is debtor selection. Number two is terms setting. So what do we mean by debtor selection? Debtor selection means, at the time of funding your customer, as a manager of the Islamic bank, you should be mm, choosing, the better customer rather than giving fund to everyone. You select the better customer who has a very who has the minimum possibility of default. So that is a very preventive type of tool. You understand that, right? So that is a kind of preventive, because you are not taking the risk from the very beginning. You are choosing only the safe debtors. But it is obvious that if you want to fund only the safe debtors, that can create a problem. You may be too much choosy and you do not get many customers and your fund remains idle. So you have to find some kind of benchmark above which you will extend the funding and below which you will not. Another one is term setting. So let's say you have got a very safe customer. So if the customer is quite safe, that means there is a low possibility that the customer will default. In that case, your terms of the funding may be quite relaxed. It can be easy term. The profit sharing, for example, can be quite attractive to the customer. But if the customer is relatively unsafe, that means there is a high possibility of default. In that case, what you can do, you can set a very strict terms, so that the terms and conditions itself, the terms and conditions themselves actually help you to protect from the possibility of default. And on top of that, that is the strict terms and conditions also is a kind of screening the customer, because normally if the terms are very strict, then the customer might not take the loan and you can get a safer customer very soon. Okay, so this is another tool. The third tool is collateral. Definitely you understand that if there is a very good collateral in the funding arrangement, then even if the customer default, your bank can take possession of the collateral and realize the value of the lost amount or the defaulted amount. But remember, in case of collateral, of course, the collateral should be marketable. The collateral should have sufficient value, realizable value, and it should be practical to get the value. So that is very important. And another tool is third party guarantee. You understand that Islamic bank and the funding customer are the two parties, and the third party is another party who is credible, who is safe, and providing guarantee, so that if the customer does not pay appropriately, then the third party will pay. So that is another tool for managing the financing risk. And the other one is monitoring. Definitely this is very, very important. Even if you select the very good debtor, even if your terms are quite understandably good, even if the collaterals are good, even if you have third party guarantees, still it is very important to monitor the customer. How the customer's business is progressing. Is it sufficiently good, or is it progressing as planned or as forecasted? It is very important to monitor. Not only that, whether the customer is paying the interim payments properly or not. Okay, these are also very important to follow.